Hello, greetings to you. You're welcome to our channel, Touch Billion TV, and today we're talking about gold, the gold chart. So yesterday we actually pinpointed some very key level zones that we feel that the markets will really pay massive attention to, and one of those key level that is very um, in our very before eyes is actually this key level here, yeah, this zone here, right? So at some point we said that the market would react at this particular zone here. Look at this here, this point here. We said the market would react at this point here, and that was exactly what happened. The market came to this point, right? Came all the way to, this is what the market did. It came all the way down, reacted to this point and came down. But then the movement down was not really massive, right? The market started going up. Now, another thing, so that has been invalidated. So most times, um, if you notice, we did not really draw a line down because you have to be able to, in trading, you don't want to be greedy, right? You most times the trade targets, the markets can be very funny. The trade point where the market is targeting, sorry about that, the trade points where you are targeting for the market to get to, like in terms of your take profits, whether you're selling the market or whether you're buying the market may not get there, right? And it was still very clear that that may not happen because if you notice very clearly, the markets had already created various higher highs, right? Higher highs, you can see that. And this was the next point of another point of higher high. So that is also giving momentum to this upward movement to the markets, creating, let's say, an uptrend, right? Because this was a high, the market failed to break this high, and the market also failed to break this previous high as well, which was this one, right? So once you understand that, so this has been invalidated, then we also said that we're looking at the market coming all the way down to feel, an imbalance here in the market. That's why we drew this box here, right? And the market came, filled it to some extent. Let's just call this around 50%, which can be called a discount if you're using a Fibonacci, and which can be called a discount if you're using a Fibonacci. And this was like the previous high here, and this can also be called the previous low. So in terms of that, we can clearly see the market filled it to some extent, and okay, then we're seeing a massive buy. Now, what are we looking here in the market? So, what are we looking here in the market? Yes, there's also tendency possible that the market can also react from this very zone here, right? The market can react from this very zone here and come to this point as also gaining another massive buy power, right? It can come to this point, also gaining a massive buy power, right? So, but then we can just take this out, not to make this point very, and take out this imbalance point. We'll just leave that box there, which is this particular box here, right? So the markets can come and react at this zone here. But if the market breaks this zone, then we can clearly be seeing the market heading massively to the upside. And if the market will be headed towards the upside, then the next point of reaction that we're going to be seeing from the market will be around this zone, very close to our previous zones, right? The next point of reaction that we're going to be seeing from the market will be from this zone. So it will be like a massive buy, right? It will be a massive buy, trust me, right? It will be a massive buy if the market fails to break this point, because this is like also a very interesting point that we really need to pay massive attention to. This is like an interesting point that we really need to pay massive attention to, right? So this is something we really need to pay massive attention to. So if you look at that, this is a zone a zone the market has reacted from before now. Lots of things happened within this point here. Lots of things happened within this point here, right? So this is zone that the market can possibly react and give us a sell. But then if it does that, then we are going to be seeing the market coming all the way down to this point, right? We're going to see the market coming all the way down to this point, like doing this. Let's get that straight. The market can come like this, do this, right? And go all the way up, right? Go all the way up, right? So we can now, let's take this out. Let's just leave the boxes and take this out like this. Let's take this out and also take this out. So focus on what we are looking at the very, very beginning or immediate, right? So this is what we can be looking at here. This is what we can be looking at here. Here, like this. This is what we can be looking at here. This point. Yes. This is what we can be looking at. This point. So this is the probably the next possible move that the markets can create, and react to and just do its thing, right? I'm just trying to go to the lower time frame here. So this is what we can be looking at, right, from the market. So we've seen the market creating structures, right? We've seen the market creating clear structures, from, let me make this wider. We've seen the market creating very clear structures, in terms of the movements of the markets. You can see that the market is currently reacting at that zone, which is very, very expected, right? Which is very, very, very expected, right? So there are key levels where the market can also react from and buy, right? So there's nothing wrong about that. The market can't just continue to just buy and buy and buy. There are people who believe that the market should sell. There are people who also believe that the market should buy. For you to make money from the market, somebody must be losing money. And for you to lose money from the market, somebody also will be making money. So it is just that. That is what actually balance this thing called trading. You understand? The money you're making is not coming out from thin air, right? Somebody is losing money for you to make money, and somebody is making money for you to lose money, right? So it's actually the person who is actually right that will be making money, and the person who is wrong at that particular point in time, that will be losing money. And for the fact that you're losing money today does not mean that you're totally wrong. It's just probably your bias at that particular point in time was not straight. You understand? And you shouldn't feel bad. It's normal. If you are coming to trading and you're saying, oh, I don't want to lose money at all, then trust me, this business is not for you, because trust me, you're going to lose money, especially when you're starting out very new. You're just going to lose money. You're going to lose money. I don't want to use the word back to back, but you're going to lose money. But so far your mind is here, you're consistent, and you're always learning, trying to look out for new ways and all that. Trust me, as time goes on, it gets better. It gets what? Better. It gets really, really better as time goes on. So if, once again, before we call it a day for today, which is 07 August 2025, which is a Thursday, if the market breaks this point, then we're actually going to be seeing a massive buy from the market massively to the upside before we're going to be seeing any reaction from any of those zones at the very top. So please, if you got value, do well to subscribe to the channel, do well to like the video, comment if you have a question or contribution, and know that we're fully here to help you win in trading. Stay blessed. See you tomorrow.